Hi all, welcome to the Daily Charts. My name is Michael and I'm the analyst here on the channel, also the content creator. So let's discuss in this 15-minute video about volatility and what are the pitfalls of volatility and how you can avoid as a trader either in crypto or stocks or maybe in futures. I'm going to discuss only stocks and crypto. How can you avoid the big pitfalls? And the big pitfalls are losing a huge percentage of your account. So if you can lose 20 or 30% of your account in one day, that's basically a disaster. That means that obviously you're doing things very wrong. You're probably over leveraged, if not super leveraged, and of course you don't pay attention to the technicalities of the moves and the trades and the implied basically volatility of the asset that you're trading. Now the VIX, which is the measure of volatility in the US equity markets, applies only to the S&P 500, and again we don't have a measure of volatility for individual stocks or individual cryptos. So that's something that you need to assess, and again, volatility changes over time. You can have a very volatile day, and the day after can be non-volatile at all. Market can turn volatile very, very fast on news. For example, let's talk about what happened a month and a half ago when the whole crypto market took big dive. Some of the cryptos lost 80% of their value at one point, and obviously Bitcoin lost like 25% of its value, Ethereum like 30% of its value, and again that was a flash crash because the price recovered. You can see here the price action in Ethereum, but still, if you have a leverage position and you are basically are being stopped, either if you have a stop loss, you stop out way lower than you wanted to with a big loss, maybe you'll survive. And if you're over leveraged, then the broker will stop you out because you have zero money in your account at one point, and it can be here or anywhere along this move, and by the time the price recovers, you have nothing to show for because your account is already closed because you are in a, let's call it margin call, but you cannot basically do anything because the movement is so fast. Anyway, the idea here that we need, or anybody that's trading an asset needs to assess the risk, needs to look at the technicality of that asset that you're trading, and then derive from that what is the risk that you can apply. So let's talk about Ethereum. Ethereum is $3,000 to $4,000 average price over the last couple of months, but that's not really that important. What's important is how big is the intraday movement in Ethereum in terms of percentages. If the percentage move is 1% per day, which is pretty much what the S&P 500 is moving, or 4% per day, that makes a lot of difference for you as a day trader or basically as an investor. Now, if you are a day trader and you're leveraged, okay, and your leverage is even 5 to 1, a move of 4%, that's basically 1/5 of your account can be gone in one day, or will be gone if you're on the wrong side of the trade. So the idea here is you want to weather volatility. You need first to trade the asset that you're trading with the right amount of leverage, preferably I would say with very little leverage, and also use the technicalities of that particular asset in your favor. So if you don't use smart the leverage, okay, and you need to be very, very careful with leverage, and you don't use technical analysis, the result will be that you are basically floating around in this market with hope, but with almost with no plan, and the result most of the time is going to be I don't want to say catastrophic, because you're not going to lose an arm or a leg, just you're going to lose your money. Let me show you another example. So if you remember on the previous chart, you saw the movement on October 10th in Ethereum, which was down 30%. But if we go and look at XRP, which is Ripple, take a look at the move. The move was down from 2.8 to 1.5. That's more than 70%. That's a drawdown of 70%, which means all leveraged, or basically all stop losses in Ripple, anybody that had a position here with a stop loss and was leveraged probably lost his account. So again, the idea here is that this type of movement hardly ever happens, but it can happen. Again, if you're over leveraged, bad thing can happen to you. Now, I'm not saying that a move like that cannot happen in stocks. It can happen. Actually, it happened, if I remember it quite right, 10 years ago. So again, being leveraged in stocks can also lead to disaster. But if you trade the US equity markets, the maximum intraday leverage that you can take is 4 to 1. So 4 to 1, if you are a reasonable trader, you're not going to put your whole account in one position at one given time. Maybe you will put 100% of your unleveraged account. Okay, so that one moves down intraday, let's say fast 10%, it's still not going to hurt your account or destroy your account. But again, over leveraging is one of the biggest pitfalls of anybody that's trading, and it also has a huge effect on those who are trading cryptos, because on the positive side, Bitcoin trades 24 hours per day, so it's not subject to gap downs, which is obviously a possibility in stock that you cannot defend against, but it does trade 24 hours per day, so you cannot be in front of the charts 24 hours. So once you're not in the front of the charts 24 hours, how many hours can you be? An hour, 2, 3, 4, 5. So again, you cannot cover the whole scope of the market, and there's always be periods of volatility which are obviously not going to be prepared for. And again, if you trade with the stop loss in the platform, you're going to lose if you are over leveraged. If you don't trade with the stop loss of in the platform, the result can be the same or sometimes even worse over a period of time. So again, coming back to the main idea, how to avoid the pitfalls of losing your account or a huge chunk of your account. Try to stay under leveraged if possible, or as least as possible, and then use common sense and technical analysis. Let me give you an example. For example, I'm looking here at just at random at this chart of 4-hour Ripple. Now take a look. This is a period of obviously, if I'm looking at the 4-hour chart, there's absolutely no volatility in this period for about 4 or 5 days. But anybody that's trading inside those 4-hour bars can feel the volatility, especially if you are over leveraged. So again, it also depends what kind of time frame you're trading. My suggestion is to trade the time frame and use percentages, which is a normal way to trade. So let's say you leverage 2 to 1, not 20 to 1, 2 to 1, and the XRP is moving up 4% per day. That means 8% for you. I think this is an amazing result. On the other hand, when it moves down 1%, you're gonna feel it like 2%. Basically, that's the smart way to trade it. Try to trade as as little leverage as possible, but use the chart to determine where is the entry point, where is your stop loss, and this over time can help you overcome or basically take away the possibility of big losses. Now let's talk about predictability. Now when you are trading stocks and you're preparing yourself, most of the time stocks will move on earnings day. Now the movement on earnings day, obviously you don't know if the movement is going to be up 1% or down 5% or up 40% or down 30%, but you know exactly when the event is happening. So let's talk about the event in calls this week, because this is an event of extreme volatility. So what happened? First of all, this stock is loaded with shorts because plenty of short traders are expecting this company to go belly up. Then earnings are coming out, and then the stock gaps up overnight or in the morning, it doesn't matter, before the market opens, and then moves up over 2 days, basically another 30% intraday. So basically in 2 days the stock moves from 16 to as high as 25. That's roughly 50%. 16, yeah, more than 50%. This move is more than 50%. So basically, if you are short KSS and you're leveraged overnight 2 to 1, I'm not saying on your account, but let's say you are, even this move can throw you outside, and basically your account is gone. If your whole account is short KSS overnight in the US equity markets, you can trade only a leverage of 2 to 1. Basically that's all over. But again, in the US equity markets, other than surprise moves, which can always happen and are always on the table, okay, and we've seen the implication of Trump's speech on when was it, October 10th. Now individual stocks can act for various reasons. Obviously, if you're trading a biotech stock or investing in a biotech stock and something goes wrong with the one of the trials that the company is involved, that can lead them to either the stock moving up 100% or down 80%. So those things happen in the past, and you cannot protect yourself against them because this is happening on a gap overnight or in the morning session just before the market opens. I'm not talking about those catastrophic events. Let's talk about how you can take advantage now of this event. So if you are aware that KSS is reporting earnings, and you do see, and this is obviously, you can monitor it using a screener or just having an account trading the US equity markets. Now because of the amazing liquidity, you can enter this position here. Let's say you're leveraged 4 to 1. Okay, that's the maximum leverage that you can use trading a US platform. So you leverage 4 to 1, you have $20,000, or you have $30,000 in your account, and you have your whole account $120,000 on this riding on this position. Okay, basically this is an opportunity where you can protect your stop loss with 1 or 2%. So 1 or 2% of risk means basically 4% of risk or 8% of risk, but not 100% of risk. And again, because of the liquidity of the asset that you're trading, you're able to take advantage of this volatility. And again, not going to discuss trade management obviously at this point, but the idea here is that volatility can work in our favor as a trader, because let's face it, if there is no volatility, why are we even trading? If there's no volatility, basically it equates to a sailor sailing with no wind. Can you sail with no wind? No, you're not going to get anywhere. So you need the wind in your back. You need the wind to be the right wind, and you don't want to, of course, encounter a hurricane. Volatility can be a great thing if you know how to take advantage of it, and you manage your boat, in this case the position, the right and smart way, which is basically not very complicated to do. Okay, so if we want to summarize, more leverage means more pain. So the leveraged you are, the higher the leverage that you are, most likely bad stuff can happen. Of course, if you are over leveraged and good stuff is happening, then you forget about the pitfalls of trading over leverage. But again, the idea here is to stay in the market, learn, and then the more you learn, the more you understand the assets that you're trading, the less leverage you need to take in order to deliver good results over time. And if you, of course, in a panic to make money overnight, most likely, I don't want to say 100%, it's not going to happen. So if we're going to look at Bitcoin, for example, trades 24 hours, you can be in front of the charts 1 or 2 hours, maybe 3. You can, try to basically predict the price action using technical analysis. Maybe you can use AI, maybe you want to use AI. I myself am not using AI at this point for prediction and the entry points, but it's coming, okay? So, but the idea here is that you need to make the decision yourself. Don't project it on others, not even on AI. So again, if you're not over leveraged, if you use technical analysis, if you use the right instrument to trade, and if you use the trend, for example, and I'm just giving you Bitcoin, because for almost 6 weeks the trend was clearly down. Any attempt to move higher buy with leverage or without leverage failed. And now maybe we're facing the different side of the market, or the opposite side of the market, where we can move up now 6 weeks. And obviously anybody that's going to try to play the counter trend will fail in this case. So again, the idea here is that you analyze the market, you analyze your risk, you try not to be as much as possible leveraged in this market or any market. And if the market is regulated like the US equity markets, then you have your limits, 4-to-1 intraday, 2-to-1 overnight, and that's pretty much the end of it. This is why people pivot towards the cryptos, which is an unregulated market, and you can be over leveraged maybe 50-to-1 under some circumstances and using different brokers. But this is basically a recipe for disaster for most of the traders and investors. Okay guys, I hope it was clear enough. If you have any additional questions, I'm sure there will be, use our email, use our comments. We will reply to all of them, especially our email. Thanks for watching. Do like and subscribe, and see you on the next video.